This is Best Buy on the monthly chart, and major levels include a monthly demand or buyer's level, however you look at it, at $43. On the top side, got resistance at the $90 level. And then most recently, you got some support down at the $64 level. However, in recent months, price has declined. And for good reason. Before we continue with the analysis, let's look at this article. They announced their earnings early this week. Tuesday, they're forecasting a bigger decline in annual comparable sales and pointed to difficult to predict consumer demand ahead of Black Friday, which is today, the start of the holiday shopping season. They cite elevated interest rates, a shift to spending on services from goods, and a resumption in student loan repayment have further strained appetite for electronics and home office products. In the more recent macro environment, consumer demand has been even more uneven and difficult to predict, the CEO stated. Company is managing planned promotions to remain price competitive in an environment where consumers are very deal focused and making trade-offs right for their budget. This means that margins are going to get hit. Best Buy third quarter revenue fell 8% to $9 billion in the U.S. as demand fell again across appliances, home theater, computing, mobile phones, signaling that higher discount failed to entice shoppers. So even with discounts, consumers are strapped for discretionary items. So Citi analysts have the following to say. In their view, the business is still in a period of declines, and it's too difficult to call the positive inflection point in demand. So with that said, fundamentally bearish. Again, price did find some short-term support. Scrolling down to the weekly chart. Right now we can see price is making lower lows, lower highs. So maybe you get that type of projection potentially. Now I want to look below this pivot low at 60 and don't really see any levels of interest until you get down into that $50 area. So if we go into recession next year, which the probability is 50-50, we can see this level of support, short-term support, being breached. And if I scroll back out, the charts are saying the best level to get long is down at the $43 level. Kind of looking at the daily, just for some additional clues. You have a depth cross, that's where the 50, which is in red, crosses over, and below to 200, which is in yellow. All right, so that's very bearish. So the chart suggests more downside risk. The chart suggests to short on pullbacks. Thanks for watching. Subscribe. Please like the video.